Hi, everybody. Welcome back to my channel. This is Oliver Wiedmaier at Ollie_all caps on Twitter, founder of Voyage Trading Group. Today is August 13th, 2022, and we just do a market review of exactly what it is that I'm seeing from the inside out and what to look for and what we can do to be prepared for the upcoming trading sessions. So the first thing we're going to do is look at the put call ratios. Okay, and as you can see, we are right up against this line. This line is what I consider to separate the bulls and the bears. We are still slightly on the bear side, but again, we are on the very edge of this divider line. So we've made a bunch of progress. We touched extreme bear in mid-July. We touched extreme bear in late June and June 13th in this area as well. And so what I like to see is for this to just continue moving up closer and closer to about 0.5 would be we are full-fledged bull run once again. So we want to stay in this area here if we want to continue this rally and determine whether the rally is turning into a bull run or not. So here we have the number of stocks above the 50-day moving average, and we have officially crossed 80%. And it will be a much better sign when we're in the 90 percentile, but for right now, 80% is a huge difference. Just June 16th, we were down to 12%. And so this is kind of where, from a technical standpoint, a lot of people are saying the bottom was. I've made this video before. June 17th is what I consider to be the market low. And so as we go through some more key indicators and things like that, we will see that number June 17th come up time and time again. So again, this is huge, huge, huge. What we like to do is get into the 90s, but for right now, being in the 80s is unbelievable. First time this year, and that's a really good sign. And here we have the percent of stocks above the 200-day moving average. We are currently 41%. Again, we want to see this number keep rising, rising, rising. We can see in late part of 2020 and then 2021, we were 80, 90%. And so that's what we want to see. We want to see this side kind of build back up. Okay, and this is the GMMA chart of the Qs on the daily. We have been really, ripping off the lows here, and we have definitely made some space between the faster moving and slower moving EMAs, and so that's exactly what we want to see in this uptrend. You see that the both moving averages, the slow and the fast and the slow EMAs are moving up and to the right in this nice smooth uptrend. And so what we want to see is that same sort of environment making our way back up. Again, we are facing this resistance here, so this is kind of very key in whether we are going to break the resistance, consolidate under the resistance, and then push further, or are we going to reject, or are we going to consolidate and then reject? So this is something we need to keep an eye on. But for right now, as I'm making this video, yes, we still have questions that need answered. However, we are in a tradable rally and we need to trade with caution. But if you're trading well in this environment, then you should keep pushing it. So here we have the SPY, and again, we are clear above in a environment where the slower and the faster EMAs are both trending higher. And so that is very good. And one last indicator we're going to take a look at is the net highs versus net lows. And so what this does and what this tells us is how many stocks are making highs versus how many stocks are making lows. So in a bull run, in a healthy market, we want to see more highs than lows being made. And so we can see that starting July 18th, we have been making a net highs. So this environment is the environment we want to be in. This is the environment that you can make money in. And so we want to continue monitoring this and continue daily run your new 52-week high scanners and until we get to a point where we're getting over 100 stocks a day making new highs, then we still need to be a little bit cautious. But for now, as long as the net highs is higher than the net lows, then we are in at least the direction that we need to be in. Let's take a look at the NASDAQ on a weekly time frame. We have two indicators here. We have a faster 5 EMA and the slower 30-week EMA. And so we've closed above the 5-week, the 5-week EMA 4 weeks in a row and above the 30-week 2 weeks in a row. And so we are right at that line of stage 1 versus stage 2 in the 4-stage analysis. And so we want to be in stage 2. We trade stocks in stage 2. And so if we are in the very beginnings of stage 2, we have plenty of time. And so there's no need to rush it here. We need the market to confirm that we are in stage 2. I don't consider us to be confirmed stage 2 just yet. Maybe 3 weeks, possibly 4 weeks, closing above that 30-week. And then we can say for sure we are in a stage 2 environment. Okay. Staying on the Qs, but on a daily time frame, what are we looking at? So we've been riding above the 8 EMA. And so we had this very small pullback, 2-day pullback, and then we cut through the resistance. What happens now? Well, either we continue and then we have to face the 200, declining 200 EMA, or I'm sorry, 200-day moving average. Or we come back and consolidate a little bit right above, possibly taking out, or we could test the 21 EMA. We could reject all the way down and test the 50. Nobody really knows. This is actually a very tricky situation here, but this is something that I preach. It's stocks, groups, then the market. So let's ignore the market, the SPY, the indices, the SPY, the Qs, when buying stocks. If stocks are breaking out and holding, if stocks are being accumulated, that's where we become buyers. So we are just gonna quickly take a look at the SPY and the Qs, but then we'll move on to some charts. So this is good to look at, but we're not going to make individual stock buying choices based on this information. This is just getting an idea of what we are looking at and what kind of environment we're dealing in. So looking at the SPY, we are much closer to the 200-day moving average than we are on the Qs. So it is likely that we will have to deal with this 200-day on the SPY. And then, whatever happens from here, we will have to deal with as it comes. Will it touch the 8 EMA and consolidate, or will it come down on the 21? Or, everyone's talking about a third leg. Nobody truly knows, but as far as I'm concerned, our low was June 17th. So let's get away from the indices and just look at some stocks. So this is SMH. This is semiconductors. This is a very interesting spot here. We are really consolidating here and possibly moving higher. So I'm very bullish on semiconductors, very bullish on TAN. This is the solar ETF. A lot of buying after it broke out over the 200-day EMA. We have been seeing a lot of buying, and we'll look at some individual names within that sector. We'll look at ARK. ARK is still lagging a bit. A lot of the names have a lot of overhead supply. So right now, there are some setups in these ARK type names, but for now, it is a no buy for me. XLE, we are holding above this gap up above the 50-day. This 50-day needs to smoothen out a little bit better. But again, we are going to look at stocks. We're not going to look at indices and take too much time looking at ETFs. We want to find the strength, and we find the strength through individual names. So let's do that right now. So these are names that I'm just looking at. I have traded in and out of these names, but these names are extended at this point in time, but they show a lot of strength, and they show institutional accumulation, which means that whenever there's an opportunity for us to enter, the low risk probability, that's where we want to enter. So the first one is SELH, and ideally we want to kind of come down a little bit and make a handle for this cup and handle. And if that does happen, we can see a breakout above this kind of 110 area. SWAV showing extreme strength coming out of this base here, huge earnings. And whenever this comes down and tests some of the moving averages, is when I will be interested in getting long. In phase, again, it's consolidating a little bit up here, but for me, I needed to consolidate either longer up here or come down and test the 21 EMA. Now we look at ON. This is a semiconductor name that has been showing a lot of relative strength. It's coming off this bottom, huge earnings. And if you look at the weekly, we can tell that it's been being bought and up by institutions in the past 2-3 weeks. So this is a name we want to get involved in. ARRY is another name that is showing huge accumulation here. Again, too extended, but there is plenty of time. There's no need to rush any of these names. When the time is right, the opportunity will present to us. PLAB, huge breakout at this point. Again, needs to consolidate, but this is some really impressive power. GFS, this is a massive move. Look at all this accumulation. We look at the weekly. This is just being bought up, bought. So this is where we want to get involved at. Right now, it needs to come down a little bit. It needs to cool down. The last one we'll look at is ENVX. It broke out. You can see that it's been bought 3 days in a row. We'll look at the weekly. Unbelievable volume. So right now we can't buy it, but at some point we will have an opportunity. And when the opportunity presents, I will be a buyer. Okay, thank you guys for watching. Right now, we are kind of in a very tough spot. However, if you are trading well and you are seeing setups, I gave myself the green light to start pushing it. I'm going to be carrying, 50+% exposure overnight. I'm going to be letting stocks run 2, 3, 4 days now. I've been taking profits on day one. I'm trying to take profits within the first 30 minutes. And right now, I have the green light to slow down, make some bigger positions, hold them for longer, and let them run. Whatever happens with the Q and the SPY, that's going to happen. It's evidence through the volume, through the price action, that institutions are buying. So that's what we want to trade. We want to trade where the institutions are buying. Institutions not buying the Qs, they're buying the stocks. So that's all I have. Thank you very much. Happy trading. See you guys.